Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the Mini S&P 500 futures contract. Bam! Right there on this Friday, the 26th day of August 2011. Looking at the Bernanke Jackson Hole day. Essentially, the market is trading it like a Fed day. And I guess technically it is, since we're hanging on all the news. Excuse me. What was interesting was we had an immense dive just after the news was released of what his comments were, and certainly the blast higher has been awe-inspiring. As you see, this is our proprietary indicators, our intraday dynamics, as we refer to them. We're completely bearish this AM and below the low of the prior day, and actually going to a new low on the intraday. So we had bearishness, bearish trend, bearish price technicals, bearish horizontal significance, bearish from a horizontal perspective, and then of course all of our indications were suggesting bearish, even bearish. There had moved to a little bit of bearish there. This indicator has been kind of iffy lately. As you can see, we had full bearishness yesterday on Thursday. In the market, full bearish indications, but this indicator has been less than indicative of true price action. As you can see throughout the whole of the session yesterday, it was bullish, but it was overwhelmingly outmanned by all the bears that were coming to the market. Yesterday was a beautiful trading day. We'll look at that in a second. And but now you see we're totally bullish. Been some pretty impressive turnaround, really. As you can see, I mean, you just really don't see that very often, where you have full all-out severe bearishness revert to extreme and full all-out bullish. So we're now bullish. We're above the close of yesterday's session. Above the lows yesterday's session, obviously, above the highs of today's early session. We're now above the trend. We have full all-out bullish indications. So generally the market is bullish even here at 1170. So from an intraday perspective, you definitely want to be buying from 1160 to 1170, and you're going to have a pretty quick ride to 1180 in all likelihood, given that's of course from a free informational trade perspective. So that'll be a free day trade. Buy anywhere. You can buy right now from 69 anywhere down to 60, and odds are you're going to finish in the money, as the market will likely move to the 1180 mark, 1180 level. Now, should we get below 1158, you definitely want to go ahead and stop that out. So you're going to have a 10-point stop. Let's say you buy at 68, and all the way down to a 2-point stop if you buy at 60. But definitely we expect 58 to be the stop and 80 to be the target from an intraday perspective. But as you can see, had a beautiful bull trap yesterday on the market. The buyers came in overnight and just sold really impressively hard to turn the tide completely to the bears, and that was the case yesterday. Been kind of a mixed picture on Wednesday. So now we're looking at a chart of the daily cash market, the S&P 500. As you can see, we have a wedge forming a triangle formation, which we absolutely love, triangle formations. In fact, we had mentioned one prior right here, as we were having this triangle formation right here: low, 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 higher high, lower high, arguably lower high. So the market was really painting into a wedge here, painting itself into a corner, a pennant formation, and essentially that's when we alerted our clients right around here that once this petered out right there, that we were likely going to have a severe move in one direction or the other. And this trading range was actually about 9 months old, so all of this selling was essentially 9 months of trading constriction, expanding. Trading expansion, and as you can see, the damage was severe in the complete technical breakdown of the market. This horizontal support, price technical support, didn't even hold. The trend broke on that day, and of course we all know the story. It's been extremely profitable for our portfolios. I think our leading portfolio, MSAUDT, has made, I think it was up around 100 and so % over the prior few, let's say 100 days. 120 days and has made another 150%. It's now up about 300%. I believe it's made another 150 to 180% just in this move. So it's really, again, we have a lot of speculators that come to our firm interested in speculation. But our key benefit is hedging. Our business picks up immensely, tremendously when the markets are falling because we can make you money hedging as a hedge, because generally we make money in markets up or down it, but if they're moving in any direction, we're very likely to make good money, and as you can see, that's what we've done recently. So looking quickly at the but back to the market, the key levels are obviously 1120 is probably not going to hold here in the market. We're probably headed to 1080 to 1100. That's kind of what we've been saying. We had a pretty impressive move to close at 1180 on Wednesday, but we sent a note out to our clients that we the snapback rallies that we see on light volume particularly can be impressive, but they're not really, only the foolhardy would really buy into them, and that's exactly what happened. That's the note we sent to our clients. That's exactly what happened. We're right back to that key 1180 level, so definitely 1180 is going to be the key level. As you can see by the triangle formation, this is definitely going to be resistance, and we should have some support essentially at today's low, a little bit below, but that's likely going to be broken. But we've had a couple of weeks, pretty much the entire month of August has been spent in this range, and now it's constricting, it's narrowing, so we definitely expect expect impressive moves. Well, those are happening on a daily basis, impressive moves. So but that's likely. So once we get above this area, we'll call 1190, definitely might be looking for the potential, but certainly once we get above 1200, we'll definitely expect continuation. This price technical swing point not to hold, and definitely a move that we had expected all along, back to retest the complete technical breakdown of the market around 1250. So that rally will be particularly impressive. We did note we had a take short profits order right here on this day. In fact, one of the key things we look at is sentiment. And looking over here at the sentiment, we did get, it's been kind of not bad, one would argue. So this is actually looking at the Russell, so buying at 645 on an extreme high in fear, level of 645. You went up to 720, so it's a nice 75-point move or so. Had another extreme level of fear. We look at the equity call ratio, and 90 didn't quite. We got up there, but we definitely, before any bottom can be put into place, we definitely expect there to be more puts purchased than calls, and really that's been the case only on the 8th day of August, when there were just slightly more puts purchased than calls. We'll look back over here, see what kind of buying opportunity this was. Now that was a pretty impressive level of fear we had in March, and as we all know, that was the actual head of the inverted HNS formation that led to a pretty impressive run. So that was a pretty impressive buy signal right there. We haven't really seen that. Of course, we haven't really seen the actual level of fear. Oh, there's that wonderful 666 in the Russell. I sure wish we'd get away from that. I'm sure everyone does. That's ridiculous. What fortune to have. Or lack of fortune to be traded for the Russell to be trading around, to be caught in a trading range around that key level. But we definitely need to see some more fear before an actual bottom will be put into place. If you extract all the indications, definitely we've just filled the gap right there. As you can see, complete outside day reversal, and now we're just retracing to the midpoint of that the prior day's range. On the TF, so definitely just a good selling opportunity, particularly up to 700. If we get above 700, we might have to gauge that around 720. Expect potential for this to be a bottom in place, but we'll wait and see what happens if that comes into fruition or not. We're leaning kind of towards the bear side, as all indications continue to point to the bear side of the market. So we're looking at a market that's again at a new high. ESM 30 putting up some nice longs there, as you can see. Generally, we like the second through the third, fourth, and fifth entries. Had a long yesterday, had another nice long today at 1152.50. So about 20 points, 20 S&P points in the money right there. So beautiful system, continues to profit nicely. So let's go ahead and look over and see how our portfolios have been doing over the. We looked at the intraday, we looked at the daily, and now we're going to scroll over and see how our portfolios have been doing. 152 day as of 8:25, still in the lead is MSA UDT. We actually had I guess a bit of a drawdown because we had a pretty impressive day yesterday in the MSA UDT. The MSA UDT up 25% yesterday, so we had a nice little drawdown to, I think, oh yeah, we sure did. 250% we got down to or so. So another great opportunity to put additional exposure to work. We had some very intelligent clients do just that. Fortunately, of course, it was also just putting profits to work, rolling profits further. In fact, one of the testimonials on the website was doing just that. I believe the client began with maybe $5,000 or $10,000, then rolled those profits into a $20,000 portfolio, and by the time they were finished, they were up $150,000 on, I guess it was a total of a $20,000 investment over that time. So there's Thursday again. Look at this. Amazingly, the master. Now the master is lagging the MSAU DT and Delta DTS, but the master gains 60%. Caught the whole of the short move, I believe, yesterday on Thursday, but the MSAU DT is still higher by 300%, 293%. Look at the MAP DT gaining $8,900. Here's where we mentioned that we're not quite ready. Snapbacks with low volume can be impressive, but we're not quite ready to read bullish and remain bearish at these levels. And of course, that was at Wednesday's close, right before that was very near the high. So that's how the portfolios have been doing. Yesterday was a complete obliteration for the master, obliterated all others, almost doubling the next number one spot with a 57% return. Actually put up a nice 23 and relatively outperformed everyone else on the day prior as well, 23% for the master portfolio. As you can see, the Delta DTS, that was the day the MAP DT gained $8,950 on Tuesday. So a very impressive week, essentially, has it been, because we had a bit of a drawdown last week. So again, a great opportunity to get involved in these portfolios. Again, full automation. If you don't already have an account with one of the nation's top futures brokers, you can open one in 5 to 10 minutes online. Subscribe to your portfolio, choose your portfolio. We have them on the website from 5, 10, 25, 50, $100,000. Choose your portfolio, whatever amount of risk capital you want to put to work, and you can become a client, become a member of these portfolios, take advantage of these amazing returns that we've had, and particularly you can hedge or just speculate, given that we're making an incredible amount of money on these huge, on all this volatility. So if you have any questions, go to the website, and actually, if you've listened to my extremely monotone voice for this long, you can go to the website and actually, I think that we may not. You can enter promo code video. You have to scroll down to add to cart. Let's say you're doing MSA UDT, just $788 for 3 months. Also, if you buy two quarters, you will get a year. You will get a year instead of just 2 quarters. So you'll get 6 months free, and you'll save $2 a round turn. But enter promo code video, and you'll save an extra 20%. It's unbelievable. So that won't be promoted. $630 for 3 months of the MSA UDT that's gained. Just over the last 150 days, MSA UDT 298.4%. If you have any questions, choose an email to MiniAnalyst.com. Go to the website, chat with the support team live, and hope you enjoyed the analysis, and we'll see you next time.